bond vigilantes are knocking, and when they come through the door, markets bleed. Japan's debt auctions just flopped. US yields are spiking. And suddenly, safe government bonds aren't so safe. As buyers disappear and rates explode, the dollar weakens, gold soars, and Bitcoin hits record highs. Watch the full video, because if you think this is just noise, you're already behind.
Gary, let's get into it. First, thing number one, the bond vigilantes arrive. What do we do now? Oh no, thing number one, Gary, the bond vigilantes arrive. The bond vigilantes are here. Tell us more.
All right. So first, let's explain to people what and who the bond vigilantes are. Countries like Japan that have a 260% debt to GDP ratio, and the U.S., by the way, the U.S., people look at our $37 trillion of debt. They think, okay, that's manageable. We have $250 billion of on and off balance sheet debt that will never be paid. There is no level of taxation or reasonable economic growth that results in us having $250 billion, $250 trillion to pay. And the thing is, we've known that. We've known that for decades. I remember in 1995 looking at the balance sheet of the US government and the direction things were going and thinking, this isn't going to work. It just doesn't work. We can't have the kinds of programs we have with the size of the economy that we have, especially with an aging country. And so, I've known for decades this wasn't going to work. And people always ask me, okay, when? When do we pay the price for this? When is this a problem? And the answer is it depends on the bond market. Now, the bond market up until now has been willing to take the next $1 trillion of financings. And when they do that, okay, they're willing to buy that risk and the government can go on, printing more paper. But when the market refuses, right, when the bond market, when the bond vigilantes don't show up and they refuse to buy the next round of debt, what happens is there's a lack of demand. Bond prices fall, that leads to higher yields, and that is said to be the work of the bond vigilantes. So the scary bond vigilantes are the people who choose not to buy the next financing and cause countries like Japan and the US and the EU is not in great shape. China has debt problems. The whole world has debt problems. And it causes those countries to have to pay the price for excessive use of debt, for spending beyond their means, just like any of us would if we ran up our credit card too high. Our version of bond vigilantes are the credit card companies who say, yeah, we're not going to finance you anymore. So at this point, our line is they may not have arrived yet in force, but a few of them are definitely peeking in the doorway. This past week, Japan had a horrible 30-year and a horrible 40-year debt auction. The yield on the Japanese 30-year government bond was 2.59% a month and a half ago. It's now up to 3.15%. The 40-year in that time went from 2.58% to 3.62%, rising more than 100 basis points in just a month and a half. On the U.S. side, the 30-year U.S. Treasury yield in that same time frame rose from 4.39% to 5.09%. We're talking about a 70 basis point move in 6 weeks. These are huge moves. And last week, the U.S. had a 20-year bond auction that had a huge tail. That's just a fancy finance way of saying there were fewer bidders than expected, and the ensuing yield, the ending yield on that auction was higher than expected. Now, for those of you who aren't following the bond market every day, which is a very healthy way to go through life, the only thing I can tell you is that these are enormous moves. These are huge moves in long-dated government securities, and we'd add extra emphasis for the fact that this just happened in the world's reserve currency. That's the place investors go when they want to seek safety. So our question to bond owners, are you feeling safe right now? Because I know I wouldn't be if I owned government bonds.
Yeah, Gary, some would think that the higher yields would actually bolster the dollar. Do you see that being the case with what we're seeing here with this bond market?
So that's typically the case, Rob. And like think through, and it's not happening now, but think through like the logic of this. If we were to say to you, okay, buy our debt, we'll pay you 1%, people might say, well, that's not very appealing at all. Say, okay, we'll buy our debt, we'll pay you 5%. And people might say, okay, wow, that's really good. And remember, In order to buy US Treasuries, you have to have dollars. So if you're in a foreign country, you've got to buy dollars and then you use those dollars to buy Treasuries. So typically, when a yield goes up, it makes your underlying currency, your fiat, more attractive, and the value of it, the strength of it, will go up with higher interest rates. Now, that's not happening. And what's going on is last week we saw the price of gold was up. It's very near all-time highs. And Bitcoin hit multiple all-time highs this week. I took a look earlier today. We were at 110,000 US dollars per Bitcoin. It hit an all-time high last week of just under 112,000. And so those are indications. The strength in these dollar alternatives indicate a weak dollar. And my view on it is that our financial system is completely unsustainable. And, I'm going to remind people, for those of you who have been long-term viewers of the five things, thank you for being with us. We appreciate it. But you'll remember, I spent all of 2024 telling everybody, no matter who won last November's election, the overspending and dollar debasement would continue, that we couldn't vote our way out of this problem. There are lots of reasons to vote for, your team, your party, your favored politician, and that's great. But no matter who we put in power, Congress is going to overspend, and that will lead to more dollar debasement, which is just a fancy way of saying a weaker dollar. So we have to pay the higher interest rates to deal with the bond vigilantes. It's just too much debt hitting the system. But all of that debt hitting the system is reducing the value of the dollar, which is something that everybody here is experiencing in the form of inflation. Again, a fancy way of saying you have lower purchasing power in the dollar. The final thing on this is that when Treasury auctions have fewer buyers and the yields spike, as we just explained, that increases the borrowing costs of the government at the same time that the amount borrowed rises. So if you're paying a higher interest rate on more debt, what happens, right? Your interest expense skyrockets. What do we do then? We print more dollars to pay the difference. That leads to higher budget deficits, more inflation, higher bond yields, wash, rinse, repeat. And there we go, right? That's exactly what happens there.
Yeah, great stuff there, Gary. And if you're looking for any additional resources on inflation, interest rates, be sure just to hit us with an email, ir@deepknowledgeinvesting.com. We've got some great resources, white papers, ebooks that Gary has written in the past that cover this topic at length, especially if you're new to DKI. Gary's been talking about government overspending, inflation, Fed interest rates for a long time now, and we will continue to do so and keep track on everything happening in those bond markets as well. Gary,
Rob,
we're going to
let's add, hang on, before we move on, let's just add one thing for the people who are interested in this topic, who want to learn more about it. I wrote an article about this, talking about what was going on in Japan and the US, deals with this at greater length. It's not a particularly long piece, but you'll be able to go into more detail. If you go to deepknowledgeinvesting.com, there's a research tab. Click that and take a look. Last week, there's a post called "It's the Bond Market. Here's What We Do." And we explain how DKI subscribers were well prepared and well positioned for exactly what happened last week. So when the markets were panicking on this, we were actually making money. We were prepared for that situation. And I give people a description of, this is how we were prepared. This is why we were positioned this way. And we take people through it. And because we wanted people to understand it, it's an important topic. That post is not paywalled. So you're welcome to go check it out for free.
Great stuff. Yeah, thanks, Gary, for adding that. Definitely will be in the written version of the five things if you haven't already read it, as well as will be delivered to our free subscribers in their written version of the five things on Wednesday.